Thank you, Ziyad. Thank you very much for giving me this opportunity, and thank you to Khurshid, who has followed up and harassed me more than any other keynote I've ever made in my life. So she is an amazing person, and I thank her for it. So, gentlemen and ladies and gentlemen, I'm going to take you out of your comfort box today. So, while my talk is supposed to be on RPA and the impact on the accounting profession, I'm going to take a real life case and talk about the implication of AI, big data, and RPA in my next big project. As those who are aware in Pakistan may be aware that the State Bank of Pakistan has issued 5 licenses for digital banks in Pakistan out of 22 applications. Planet N Group, along with Park Kuwait, it was one of the successful applicants and has received a no objection certificate from the State Bank to create a digital bank in Pakistan. And what I want to do is anchor my talk today about how we are going to use AI, big data, and RPA to create this bank. We are a digital bank, we're Sharia compliant, but we have no brand. Nobody knows what 𝐀𝐮𝐽𝐻 Islamic Digital Bank is. So if I'm going to compete, if we are going to compete with large established commercial banks, with large established Sharia compliant banks, then we need to figure out how we are going to harness AI, big data, and RPA. Why? Because big banks have low cost of funds, they have branches. Retail bank is not good. Digital retail bank is going to have no branches. So we need to compete, in my view, on 4 things. We need to compete on the customer journey, where we'll be using AI, and I'll give you practical implications. What do I mean by that? We need to compete on credit underwriting. You'd be surprised if I told you in a country of 220 million people, there are only close to 11 million active loan customers in the entire Pakistan. It takes 2 months to open a bank account for a private limited company. Maybe if you're lucky, it'll take a month. To provide credit to a new to industry person, it takes 2 months. If you want a credit card and you're not already an existing customer of a bank, it'll take you 2 months. And the entire process is paper-based. Real-time settlement of financial transactions sometimes takes 2 to 3 hours to happen, as opposed to instant settlement, which is a requirement. HBL and large big banks have 15 to 20,000 people in their staff, 350 people in just the compliance function. I have no idea what they're going to have in the accounting or CFO function. I can tell you that 𝐀𝐮𝐽𝐻 Bank is going to have 7 people. That's it. And I'll tell you how we expect to achieve that. That's why RPA will take a major role. Technology, as the earlier speaker, Mr. Anur, said, is going to overtake us. You can't sit back and think that, this is happening anywhere else in the world. You've got to do it now. So what are the blocks that we are building 𝐀𝐮 Islamic Bank in, so that you can understand how technology is going to play a huge part? Since we are a new bank, we have no legacy systems, which means that we don't have to worry about making changes in a core banking stack, which a Temenos or Oracle or provider can take 3 to 4 months for a simple change to change the customer journey. So we're building a technology stack from scratch. We built it. So that's not our issue. Most commercial banks, unfortunately, feel that digital banking is about the front-end app, that you've got a great, sexy app with great customer journey, but the back end of the banks is yet to be automated. That's why it takes 2 months to open a company bank account. That's why it takes 3 hours to settle a financial transaction. That's why it takes sometimes 2 months to approve credit for somebody who's new to the industry. Now, that's where we want to compete, and how will we use technology, how will we use big data, AI, to do that? There is tons and tons of and tons of financial information that currently resides in the banks, but the banks don't use it. So the credit card information is sitting in the credit card department. The account information is sitting in the branches. Payment information is sitting in the money transfer department. And there is no customer profiling to understand what the entire customer profile is, let alone figuring out what the best method of engaging with the customer on social media is. 65% of Pakistan is under 25. We have the largest youth cohort in the world. So if we're going to create something, we cannot ignore this segment, even though they're not earners right now, but they will become earners. So let me give you some examples first of big data AI, and then I'll talk about RPA as well. Why is RPA important? Because RPA is because I can compete on two things. I can compete on revenue, I can compete on cost, and I can compete on efficiency. So three things. The last company I built, Telenor, EasyPaisa, Tamil Bank, EasyPaisa, was valued at $410 million by Ant Financial Services when they acquired 45% stake in it. The team's ambition now is to actually build $1 billion company. If we are going to build $1 billion company, then I'll tell you right now, even when we are worth $1 billion and we have 10 or 15 million active customers, whether they are loans, whether they're savings, investments, payments, or takaful, we're not going to have more than 200 people. 200 people at best is the maximum staff Rakmi Islamic Digital Bank is going to have, which means that we can't just say, technology is good. We've got to eat, drink, and sleep technology. Our decision making has to be based on data sets which are available to us. But I will agree with, Mr. Al-Noor, that data cannot substitute at the end human decision making. So data gives you a set of decision making. Repetitive stuff can be done by data, but in the end, the human element will come in. You can't have, a database CEO just going to run the bank based on just data. It doesn't work like that. Although many of the interactions we're hoping to have at the front end with the customer and at the back end are going to be totally reliant on technology. Our aim is to open a 1-minute account in 1 minute. Our aim is to open a company account, which is 2 months right now, under an hour. Our aim is to give a credit decision under 10 seconds. Now, how are we going to do that? It's going to be based on the data we extract. First of all, we're going to be an open API bank. That means we're going to have 25, 30 partners who do stuff really well, which we don't want to reinvent. So we will engage with them on two bases: that give us the customer data you have. You and I will both share the customer. We will use that data to create credit algorithms to then use our credit engine to immediately make a decision, and in some cases, pre-approve that customer. So let's say we talk about FMCGs. FMCGs provide the good to the retailers, the kiryanas, the superstores, the pharmacies through distributors. Every month, again, this is talking about repetitive transactions. Every month, these retailers, 5.1 million kiryana stores, superstores, pharmacy stores, order branded goods, either from the distributor or from the slew of tech companies like Dastagir, Retailo, Bazaar, Jugnu, which have come up, which has amalgamated multiple manufacturers onto a single app for the retailer to order. This is data. Not very difficult for us to take this data and create a single credit engine which says, based on this person's monthly procurement from these FMCGs and based on his sale, because the order cycle is 7 days, I would be able to tell how much is he ordering, therefore how much is he selling. And I create a simple algorithm which says, based on his weekly procurement, I will provide credit to the FMCGs to provide goods to this retailer. Now, this is not rocket science, but it's not been done. Supply chain finance, which is trillions of rupees in Pakistan, has not been digitized. Obviously, we need to figure out how we're going to collect the money, because we are a branchless, we don't have any branches. How are we going to, make sure that the money is given on time? How do we open the company account? So those are all customer flows. The first thing I'm saying is there's no documentation. I don't want the 7-page account, loan processing. I can do in terms and conditions. Once I have the data, my credit engine, after we've done our pilots, will make a decision in 20 seconds, and we will credit the FMCG's account under a minute, and we will advise the FMCG and the distributor and the retailer so that he knows that the funding has taken place. That's, in my view, is the easier part. Now comes the RPA part, because what's RPA? RPA is basically taking a disparate set of clicks on a computer that a manual process does and automates it by creating a script and mimicking the human action. So all these manual processing of inputting data based on the loan that we've generated, based on the invoice of that particular retailer, can all be done through RPA. That's why our finance people, we're talking about in operation, maybe. So in the 200 people we're talking about, 50 are data scientists. All the data scientists, analytics, that's all their job there is. Every process automated, every process is set of financial results coming out. 50 people in tech. We're a tech-driven entity. 50% is just tech and data science. So we've got 7 to 8 people in finance, 4 people to 5 people in compliance instead of 150. And the rest, 25 to 30, are product managers, segment managers, research people, UI, UX people. The core functions that a bank has in terms of traditional banking of accounting, audit, finance, human resources, in the total of 200 people is going to be less than 25 because it's the intention to use big data, use AI, use RPA. RPA actually is one of the most disruptive technologies. I mean, a Deloitte study says that 53% of all organizations are using it, but not surprisingly, only 1/3 of this number is actually using it for accounting purposes. So you as a group need to figure out, why are you lagging so behind? I understand it's easy for doing repetitive tasks in manufacturing, creating a car or assembly line. But as various speakers will tell you today, there are many repetitive tasks in accounting. If I'm doing invoice processing, if I'm doing expense management, if I'm doing payable processing, if I'm doing payroll management, all these are repetitive processes that the OCR can use to extract data from an email or from an invoice, create, the payment mechanism, pass the financial accounting entry, and even, have best market practices on doing AI-based or RPA-based audits. Now, it doesn't replace the full audit function, but it clearly reduces my cost. So for a digital bank, unit economics is one of the principal things we need to focus on. And unit economics is obviously based on how much cost I'm going to spend in acquiring a customer, but more importantly, how much cost am I going to incur in actual processing the transaction? Now, if I have 150 people in operations and accounting manually doing this, there's no way I can create the unit cost that I'm looking for. So from day one, we are looking at RPA, of which financial repetitive transactions can be automated. Day one, using technology. We have the Rakmi Knowledge Platform, which will take data from our open API partners, all data that we already have, and build customer profiling. Using AI, we will then decide when to upsell, cross-sell, and look at the customer journey to figure out when to provide the relevant intervention as far as the customer is concerned. But that's the marketing or the customer side. But there's also a side for the regulatory stuff, which can be using AI and RPA extent as well. Are there anomalies in what the customer flow is? The AI easily picks it up, this transaction, which is beyond the normal pattern. Even regulatory compliance, we can put in through these AI engines what the best audit practices are. So before the even audit comes in, AI is being used to do a self-audit and it's being processing itself. Again, both for unit economics and for the customer journey, we've got to figure out that if it's taking 3 hours for a bank to reconcile because the bank has sent a statement, they need to send a statement out, Why can't it be done in microseconds, let alone minutes? And that's what we want to build a system for, starting from day one. Instant, credit, instant debit. And right now, it will take you about 2 hours for, if you're using one link to get a credit to your account, which finally gets reflected. It might show up in your customer account, but the entire transaction is not complete. So the point I'm making is that this is not just academics. We put $25 million in the capital of the company. Our intention and hope is to create a $1 billion company. And if we could create a $500 million company, certainly creating a $1 billion company is not outside the realm of possibility. But the structure to start with of Rakmi Islamic Digital Bank is based on tech, is based on AI, is based on big data and RPAs. And our intention, and if you call me back after a year or 2 years to tell you how we've actually performed, I'll be able to tell you this vision of ours of using this technology from day one and creating a bank which actually is looking from the customer lens, understanding the customer journey and providing decisioning, whether it's for savings, lending, takaful, payments, or information in microseconds. Yes, generation of people under 65 takes microseconds to decide if they're going to transact with you or not. On Instagram, if they're looking at their read, microseconds, either you'll engage them or not. With 65% of your population under 25, you got to cater and think about how to address this population, which is tech savvy, which is not looking for checkbooks, which is not looking for visits to your branch, but are looking for fulfillment sitting where they are. So, ladies and gentlemen, I thank you once again for this opportunity to be your keynote speaker. I hope I've been able to demonstrate the real life practical application of the technologies that we are talking about. And I thank you once again for listening to me.
Thank you, Nadeem Hussain Saab. And we have few questions from the audience for you. Number one is, how do you see the future of branchless banking like Stripe in USA? And what is State Bank of Pakistan plan for future?
So, branchless banking, in this definition has two connotations. That you actually don't have a physical bank branch. So the State Bank, this is what 𝐰𝐲𝐵 did 11 years ago. We started using retail outlets and created them into a bank. So that was under the branchless banking license, which means that you don't have a physical branch of a bank which can cost you several million rupees, but you use an existing railroad and provide three main services: deposit, credit, transfers. That's 90% of the use case for customers in Pakistan. They're not looking for financial guarantees, LCs. That's not 99% of Pakistan. So branchless banking exists if you're talking about branches, definition being a regular bank branch. Now, the other one, like you're talking about Stripe, PayPal, that's coming in through the EMI license that the State Bank has created. There are 8 EMI licenses and now 5 digital bank licenses. And none of them are going to have a branch. But if I have a wallet, how do you populate it? You populate it either one of two ways. Somebody does a interbank transfer to an IBFT or a RAS to populate that wallet, or he physically goes to a location and puts cash in it. So while you have digital banking, until your level of digitalization becomes so high that your wallets are being populated, your payroll is coming in, people are doing transfers, you will need physical locations to populate your wallet.
Thank you, Nadeem Saab. The next question is about credit rating agencies. Will there be specialist credit rating agencies? The question may be related to RPA. Will there be any RPA to transform this job? So please share your thoughts.
Very honestly, maybe other speakers will be able to give a better answer than that. My view is, obviously, like any assessment, a credit agency looks at your portfolio, looks at your liquidity, looks at your concentration of depositors, looks at your price sensitivity, your tenor mismatch between your funding and lending. Now, a large portion of that could be automated. Sensitivity tests are already being run. could be even better. But my view is, at the end of the day, like an auditor's report, a credit rating agency will have the human element at the end of it, but a lot of its assessment could be using AI big data to create the data sets to come to a end credit report.